Will Barclays turn Chinese? A red-hot macro report, plus market numbers and more IPOs. Chinese stock markets are back up. The Shanghai Composite surging last Friday and this Monday to pass the 4,000 mark for the first time since June and closed today at 4,323.966. The news is the same for other major indexes, including the CSI 300, which is above 4,000 points for the first time in a month, and for the Shanghai B shares that closed July 25 at 309.32 and have now recovered the ground lost since June 19. I'll have more numbers in the macro report coming up. And there's a new way to play the Shanghai A-share market. Remember, A-shares are not available directly to individual foreign investors. The IPOs 30 China A-share index, a new product of IPOs Schuster out of Chicago. The IPOs 30 components are the largest and most actively traded A-shares. A-share IPOs enter the index at about a week old and stay for 1,000 days. Currently, the sector composition is about 1/3 financials. The top 10 holdings include Chinese frontrunner, industrial, and commercial bank corp. WuXi Pharmatech, a contract research firm headquartered in Shanghai, has filed with the United States Securities and Exchange Commission for an IPO on the New York Stock Exchange under symbol WX. WuXi Pharmatech plans to issue over 13 million American depository shares priced between $11 and $13 US. At that price, the company could raise up to $120 million. The funds will be used to build a drug safety center for increased lab test services. The company's two biggest customers, Pfizer and Merck, already account for almost 30% of the firm's revenue. Another one from New York, eHouse, a real estate services company with a sales force in 20 Chinese cities, has filed with the SEC to sell American depository shares in the $11.50 to $13.50 US range. The offering is approved under symbol EJ and could raise over $120 million. Property markets in China are booming. I'll have more on that in the macro report. China Southern Locomotive and Rolling Stock Industry Group plans a dual Hong Kong and mainland IPO for early next year, according to reports. The listing could raise up to $2.5 billion US. The company was established by the State Council in 2002 and is one of the top 100 companies in China. Its Sifang locomotive subsidiary in Qingdao produces high-speed rolling stock. China Southern Locomotive has a ready customer in China's state-owned railways. And one of the biggest Chinese companies available to investors, Aluminum Corporation of China, or Chalco, will issue a huge A-share block as part of its takeover deal for Baotou Aluminum Company. Consolidation in high energy-consuming industries is an important trend as China tries to achieve energy conservation. Takeover targets most likely will be smaller and privately owned companies. Barclays, Britain's third biggest bank, will receive a huge multi-billion-pound cash infusion from the China Development Bank, initially giving the state-controlled Chinese company a 3% stake in Barclays. Barclays will use the money in a hotly contested bid to acquire ABN AMRO and thereby create one of the world's biggest financials. If that merger is successful, China Development Bank will increase its stake in Barclays to 6.7%, still a minority position that will not come with a voting board member. Although an investment by China on this scale is large, it is not unusual in an open economy such as the United Kingdom and is mostly non-threatening. Nonetheless, the prospect that venerable Barclays, once the largest banking company in the world, could turn Chinese has many in the city chewing on their bowlers. Coincidentally, the American Blackstone Group, where China owns a 9.9% stake, will act as advisor to China Development Bank on the Barclays deal. Meanwhile, on the continent, the EU is putting China on notice. As in the USA, quality assurance has become the new control to slow the flood of Chinese imports. On Monday, the EU Consumer Protection Commissioner Magdalena Kuneva met her Chinese counterpart Li Changjiang and gave China until November, when Prime Minister Wen Jiabao meets with European Commission President José Manuel Barroso to deliver an acceptable report on actions taken for safety in Chinese exports. European steel producers, however, want real action. The European Confederation of Iron and Steel Industries says China's steel industry is out of control, with EU imports from China expected to double this year. EU steelmakers are asking the EU to file 3 anti-dumping measures against China with the World Trade Organization as soon as September. And now for the macro report. Second quarter and half-year 2007 data were released by China's National Bureau of Statistics last week, and the numbers say the Chinese economy is hot to trot. Some highlights. Gross national product is growing at 11.9%. Headline consumer price inflation is at 4.4%, with the June spike in food prices up 11.2%. Overall, the economy is still all about investment and exports. Fixed asset investment in China was up 23% in June, and exports increased 27% with a surge of exports to the EU, where Chinese goods now make up a quarter of all EU imports. Consumption is gaining strength. Retail sales were up 12.9% in the second quarter. Chinese coal production was up 12% first half, with import of coal up 47.6%. Foreign exchange reserves grew to 1.33 trillion US dollars by in June. China's money supply is up 17% in June, with bank loan growth up 16.5% at the end of the quarter. Renminbi appreciation accelerated and is currently running at a 6% annualized pace, believed to be the maximum increase tolerated by the finance ministry and Chinese central bankers. Property prices were up 7.1% in 70 major Chinese cities. And the Shanghai Composite Index has gained 20% since the end of the first quarter, even though it is down 14% from its May peak. So, is the Chinese economy a runaway train? Is it overheating? Will China move to increase interest rates and put in place policy measures, as it has so many times in the past, to put the brakes on the boom? Will there be a hard landing like the one in the late 80s or mid-90s or 2004? Most analysts are saying no. Many believe that the economy is in an upturn through 2008 due to an economic cycle that now follows the transfer of power in China's national government. Also, many believe President Hu Jintao, who in all likelihood will be re-elected for a second and final 5-year term, will do whatever possible to ensure the Beijing Olympics go smoothly and the country is not rocked by any domestic economic crisis. I'll see you next time.